Big tech is spending $650 billion on AI this year. Not over 5 years. This year. Amazon committed $200 billion in capital expenditures for 2026 alone. Alphabet between $175 and $185 billion. Meta up to $135 billion. Microsoft also spending at a record pace on AI infrastructure. 4 companies. 1 year. Roughly $650 billion. That's approximately the size of Sweden's entire economy. And the market did not cheer. When Amazon announced that $200 billion figure on its earnings call, the stock dropped over 10% after hours. The next trading day down another 8%. Investors had been expecting Amazon to spend around $146 billion. They got $200 billion instead. The question that followed wasn't great. AI is accelerating. It was, when does any of this actually turn into profit? Nobody had a clean answer. Then Jensen Huang walked onto a stage. NVIDIA's annual flagship event, GTC 2026, March 16th, SemiAnalysis. And he made one very specific claim, that the demand for AI computing may be far larger than anyone, including the companies spending $650 billion, has modeled for. That changes the whole story. Because this video isn't really about NVIDIA's new chips. It's about why big tech literally cannot stop spending. What NVIDIA is actually building, and it's not just chips. Whether anyone is catching up, and where the money is really flowing next. Let's get into it. So why keep spending $650 billion when investors are clearly uncomfortable with it? There's one structure that explains everything. Think about 3 burger joints on the same block. One of them installs an automated fryer. Order speed triples overnight. Now the other 2 owners face a decision. Buy one or wait and see. But here's the trap. If you wait and they take all your customers, by the time you want to buy the fryer, you won't have money left to do it. So you buy it now, even if you have to borrow. That is the AI investment dynamic right now, exactly. Satya Nadella's message has been consistent throughout this cycle. The bigger risk is underinvesting and falling behind. Not a bubble call. Not a return on investment guarantee. Just the fear of falling permanently behind. And there's actual data behind that fear. Google Cloud revenue grew 48% year over year in the 4th quarter of 2025. Its fastest growth since 2021. Microsoft Azure AI contributed 16 percentage points of growth in a recent quarter. Amazon Web Services grew 24% year over year in the 4th quarter. The revenue is starting to come through, which means any company that pulled back early is now watching competitors compound on infrastructure they don't have. As long as that fear holds, the $650 billion keeps flowing, and most of it flows through one company's technology. So what exactly did Jensen claim? At GTC 2026, Jensen said he expects purchase orders between Blackwell and Vera Rubin to reach $1 trillion through 2027. How big is $1 trillion? Apple, the most valuable company on earth, does about $390 billion in annual revenue. NVIDIA is saying it sees more than twice Apple's annual revenue coming its way in the next 2 years. Is this signed contracts or just forecast demand? CNBC reported Jensen's claim directly as purchase orders. Not projections, not wishful thinking. Though it's worth noting, this covers 2 product lines across 2 years, and the full picture includes both firm orders and strong forward commitments. The direction is clear. The exact breakdown is what investors keep probing. How does it compare to last year? At GTC 2025, Jensen said he could see $500 billion ahead. 1 year later, $1 trillion, doubled. While investors were questioning whether AI spending had gone too far, then why did the stock only move 1.6% on the day? Because the market already expected something big. What investors actually want isn't a large number. It's clarity on when this converts to earnings per share and at what margin. And then Jensen said one more thing before moving on. This won't be enough. Computing demand will be far larger than this. He announced $1 trillion, then said it might still be too conservative. That framing matters. Because what Jensen is really saying, the industry is still underbuilding for what comes next. Here's the shift most people missed watching GTC. Up until now, NVIDIA sold one machine. An extraordinarily powerful machine, but still one piece of the infrastructure. This time, Jensen said he wants to build the entire factory that machine goes inside. To understand why that matters, you need to know how AI actually works. 3 stages. Training, inference, orchestration. Training is teaching the AI. Feed it enormous data. Let it learn patterns, like making a chef memorize 10,000 recipes. This is where GPUs come in, and NVIDIA already owns 80 to 90% of this market. Inference is when the trained AI actually does its job. You ask ChatGPT a question. It answers. That's inference. The chef has memorized the recipes. Now she's taking orders and plating food. Training happens occasionally. Inference happens billions of times a day. As AI spreads everywhere, the inference market becomes far larger than training. And that's exactly where NVIDIA had a problem. GPUs are unbeatable for training. They're relatively inefficient at inference where all the volume is going. So NVIDIA went and spent $20 billion on Grok. Grok is a chip startup founded by the team that built Google's original TPU. They built a language processing unit, an LPU, designed from the ground up for one thing: AI inference at extreme speed and low latency. CNBC reported this as a $20 billion asset purchase, NVIDIA's largest deal ever. Officially, it's structured as a non-exclusive licensing arrangement, with Grok continuing to operate independently. But many of Grok's founders and engineers have joined NVIDIA, and the Grok 3 LPU is now integrated directly into NVIDIA's rack architecture. Jensen's words on stage: "This will be the next Mellanox." Mellanox was a networking company NVIDIA acquired for $7 billion in 2019. People questioned it at the time. Today, it's a core revenue pillar. He just spent $20 billion on Grok. Think about what that signals for where inference is heading. Orchestration is the third stage, and this is where it gets interesting. For AI to work autonomously, planning, deciding, executing step by step, it needs a brain that processes instructions in sequence. That's traditionally been the CPU's job. Intel and AMD have owned that market for decades. Jensen announced the Vera CPU at GTC, NVIDIA's own processor, purpose-built for agentic AI workloads. 88 custom NVIDIA cores, twice the efficiency and 50% faster than traditional rack CPUs. The industry calls this agentic AI. AI that drafts your reports, books your meetings, writes and executes code by itself in sequence without a human in the loop. Jensen declared the age of agentic AI has arrived, then immediately pulled out a CPU designed for it. That was not a coincidence. And then there's the software layer. NemoClaw, NVIDIA's enterprise platform for deploying always-on AI agents. DGX Spark, an AI supercomputer that sits on your desk. Dynamo 1.0, the open-source operating system for AI factory inference, boosting Blackwell GPU inference performance by up to 7 times. Sell the hardware. Build the infrastructure. Write the platform. Once a company builds on NVIDIA's stack, leaving becomes very expensive. The real message of GTC 2026: training, inference, orchestration, software. Every layer where money moves in AI, NVIDIA wants to own all of it. Fair question. Let's be honest about it. AMD is the most direct competitor. The MI300X is a legitimate alternative for certain workloads. Some hyperscalers are deploying it. But AMD doesn't have NVIDIA's software ecosystem. And that gap is widening, not closing. Custom silicon is the more interesting threat. Google has TPUs. Amazon has Trainium. Meta has MTIA. And Meta actually revealed a full custom AI chip roadmap at its own developer event this year. Every workload that moves to custom silicon doesn't need an NVIDIA GPU. And the hyperscalers are investing heavily here. But here's what Jensen keeps pointing back to. And it's the single most important thing to understand about NVIDIA's position. CUDA. In 2006, NVIDIA released CUDA, a programming platform that let developers use GPUs for general computation, not just graphics. For years, almost nobody used it. Then in 2012, a research team used CUDA to train a neural network called AlexNet. It won an image recognition competition by a margin so large, it changed the entire field of AI. Every major AI model since GPT, Gemini, Claude, all of them, was trained on NVIDIA GPUs running CUDA. That's 20 years of developer habits, tooling, and infrastructure. Switching away from CUDA doesn't just mean buying different chips. It means retraining your engineers, rewriting your software stack, and rebuilding your infrastructure. Most companies won't do it, especially not while the AI race is still accelerating. Custom chips work inside one company's walls. CUDA works across the entire industry. That's the moat, not a patent, not a government contract. 20 years of compounding inertia. Here's something companies almost never do. When you launch a product, you talk about that product. You don't put 3 generations on the board at once. Jensen did exactly that at GTC 26. Vera Rubin shipping second half of 2026. Amazon Web Services, Google Cloud, Microsoft Azure, and Oracle are all confirmed as first deployers. Rubin Ultra 2027 features the new Kyber rack architecture. 144 GPUs and vertical compute trays designed for higher density and lower latency. Feynman 2028 running on TSMC's A16 process node. Why show your hand that far ahead? Think about it from AMD's perspective, or Google's custom chip team. You're working hard to close the gap, and every time you think you're getting close, the target moves further ahead. It's like running a marathon where the finish line keeps moving. At some point, the chase stops feeling worth it. That's the psychological effect Jensen is deliberately engineering. And Vera Rubin backs it up with verified performance numbers. Up to 10 times higher inference throughput per watt versus the Blackwell generation, and 1/10 the cost per token for running large AI models. Think about what that means for data center economics. If your competitor gets Vera Rubin before you, they can serve 10 times the AI requests at the same electricity bill, or serve the same requests at 1/10 the cost. For AI companies, where inference is the single biggest operating expense, that's not a competitive edge. That's a completely different business model. And when you add the Grok 3 LPX rack alongside Vera Rubin, NVIDIA claims up to 35 times higher inference throughput per megawatt, and 10 times more revenue opportunity for trillion-parameter models. We've seen this pattern before. In 2020, NVIDIA launched the A100 and took control of the AI infrastructure market. People said they were too far ahead. 5 years later, over $3 trillion in market cap. The stock went up more than 20 times from that point. This 3-generation roadmap rhymes with that moment. The scale just isn't comparable anymore. Jensen said something on stage that most people glossed over. Tokens are the next commodity. Tokens are the unit AI uses to generate a response. Every time an AI model produces output, tokens are consumed. Like electricity, like bandwidth. Jensen's argument, tokens will be traded as a standardized price commodity. To produce tokens at scale, you need chips. To run those chips efficiently, you need a very specific type of memory. High bandwidth memory, or HBM. The Vera Rubin NVL72 rack holds 20.7 terabytes of HBM4, delivering 1.6 petabytes per second of memory bandwidth. It's not just capacity. It's the speed of moving data through the system. That determines how fast a model can think. And Vera Rubin runs on TSMC's 3-nanometer process. The 2028 Feynman chip steps up to TSMC's A16 process. NVIDIA doesn't manufacture its own chips. Every next-generation GPU goes through one company's fabs in Taiwan. The domino chain looks like this. Big tech commits $650 billion to AI infrastructure. That money flows toward NVIDIA and GPU orders. Inside every NVIDIA GPU is HBM, made by a handful of memory manufacturers. And those GPUs are manufactured at TSMC. The supply chain is real, it's concentrated, and it runs through very few choke points. 3 signals worth watching going forward. Signal 1, hyperscaler cloud revenue growth. This is the most important one. Next quarter, watch Google Cloud, Amazon Web Services, and Azure growth rates. Google Cloud just hit 48% year-over-year growth, its fastest since 2021. Amazon Web Services is at 24%. Azure AI is accelerating. If those numbers hold or improve, the $650 billion is converting into revenue. The spending is working. If they slow down, the overspending narrative becomes real very fast. That single number will tell you more about this AI cycle than any product announcement. Signal 2, Vera Rubin delivery timeline. Jensen said it ships second half of 2026. Amazon Web Services has already committed to deploying more than 1 million NVIDIA GPUs plus Grok LPUs. Microsoft's Fairwater AI superfactory sites are confirmed on Vera Rubin NVL72. If delivery slips, the $1 trillion demand picture starts to look very different. Watch TSMC capacity statements. Watch any supply chain friction out of Taiwan. Signal 3, Agentic AI enterprise adoption. The entire Vera Rubin demand story depends on enterprise agents going mainstream. Jensen called OpenClaw the fastest growing open source project in history at GTC. NemoClaw puts an enterprise wrapper on top of it. The question is simple: are Fortune 500 companies actually deploying this at scale? Are token generation volumes spiking across the clouds? If adoption is slower than Jensen's vision, the demand multiplier doesn't show up. If it's faster, $1 trillion might actually be the conservative estimate. The biggest question after GTC 2026 isn't whether NVIDIA is winning today. That part is obvious. The real question is whether this $650 billion spending wave actually converts into durable revenue across cloud, enterprise software, robotics, and autonomous systems. If it does, says Sid Pictorium, NVIDIA may be even earlier in this cycle than most investors think. If it doesn't, then the entire AI infrastructure trade starts to look a lot more fragile. That's the real bet now. Not whether AI is important, but who captures the economics of it? And right now, Jensen Huang is making a very deliberate argument that the answer is NVIDIA at every single layer of the stack. Training, inference, orchestration, software, physical AI. Whether the next 5 years prove him right is the most important technology question of this decade. If this breakdown was useful, hit like it genuinely helps. Drop companies or topics you want covered next in the comments. Subscribe and hit the bell so you don't miss the next one. See you there. This channel shares ideas, not investment advice. All investment decisions are your own responsibility.